This video is going to go along with your homework assignment for treasury stock. And I have, once this video is done uploading, you will also see the homework assignment for treasury stock. Now, on the homework assignment, I set it up the same way as I did with the dividends, the cash dividend journal entries. There is a example problem that I've done, and then there is two problems for you to go ahead and solve. Now, like I've mentioned to you recently, I need you guys to make sure that you're paying attention to the numbers. It's very easy when you're doing problem after problem to get caught up with numbers because you are doing one problem, but yet you're still using the numbers from the other problem. So make sure that you pay attention to that. A lot of the accounting work that you guys are seeing, it's just mainly the same exact questions of what's going on and how to do them. The only thing that is changing is simply the numbers on those. So you got to make sure that you're paying attention to which question you're working on and readjust your numbers. Okay? So as you go ahead and you open up the Word document that has the treasury stock examples on there and your homework problems, you'll see that obviously you should have paused and got it up, and now you're back with me. You'll see that it says Chapter 11 Treasury Stock Questions, and it says Example. And it says Smith Corp has purchased 5,000 shares of its own common stock back, okay, at a price of $4 per share. Prepare the following journal entries. So first thing you need to know is that when a company buys its own stock back, that is called treasury stock. Again, that's what we're talking about. Now, the stock that they're buying is what is outstanding already, okay? And that is outstanding common stock. Now, the one thing that happens a lot is students tend to see the word common stock and start using it, okay? You don't use common stock when it comes to treasury stock, okay? You're purchasing it, but what you're purchasing is no longer common stock. It becomes treasury stock when you purchase it, okay? The next thing I want to point out to you is that keep in mind the price per share that you purchased it at. Because whenever you sell treasury stock, you have to take it off your books at the price that you paid for it. So it's very important to keep that in mind also. I'm going to give you some of the little quirks on trying to get these journal entries done. And they're not difficult, so don't get frustrated. They're not a very difficult journal entry to do, especially if you pay attention to the things that I tell you, such as making sure that you analyze your transaction first. If you're selling something, obviously, if you're selling something, your cash is going to be going up. And you know that when cash goes up, you debit cash. If you go out and you buy something, then you know your cash is going down, which would be a credit. So just analyze your transactions, and you guys should be able to work through these journal entries very simply. And again, I will attempt to give you every helpful hint that I have. Anything to make anything easier, I will attempt to do for you. Okay? So now that we've read the example, Smith purchased 5,000 shares of its own, and it says it purchased at $4 per share. So letter A says purchase 5,000 shares at $4. So the first thing you say is, okay, I'm purchasing common stock, but this is now going to be treasury stock because I'm buying my own stock. And you know you're buying something, which means your cash is going to be a credit, meaning it's going to go down. So if your cash is going to be your credit, then you need to figure out what your debit's going to be. Well, we're working with treasury stock, and since treasury stock is a contra equity account, meaning it has the opposite balance. So normal equity accounts go up with a credit. If it's a contra equity, means it goes up with the opposite. So it's going to go up with a debit. So in this case, you're going to be debiting treasury stock, and you're going to be crediting cash, which means treasury stock is going up and cash is going down. And you take the number of shares that you're purchasing here, which is 5,000, and we're buying them for $4 a share. So 5 times 4 is 20, and that will give you your $20,000 like you see below letter D for the journal entry. So that's an easy one. That's just purchasing. Now, letter B talks about you sold. So the first word in that sentence says sold. So if you sold something, that means you're going to be receiving something. And in this case, you're going to be receiving cash. Now it says you sold 2,000 shares of treasury stock and you're selling them for $6 a piece. So a couple things just in that sentence alone. Number one, you're selling something, so cash is going to be going up. Cash goes up with a debit. So we know we have our debit account automatically. Now, what are we selling? In this case, we're selling treasury stock. Now, we know treasury stock went up with a debit, which means it's going to go down with a credit. So now you've got two of your accounts set up. You've got your cash set up as a debit, and you've got your treasury stock set up as a credit. Now let's figure out the amounts. Well, we're selling 2,000 shares at $6 a share. So that means that's how much money we're going to be receiving. So the 6 times 2 gives us our 12,000 that you see there. Now here's the part where students get kind of confused. We purchased the treasury stock at $4 a share. We have to take it off the books at the same price. So in this case, you're going to take the 2,000 shares and multiply by the cost per share, which was originally $4. So 4 times 2 is going to give you the $8,000 that you see listed under treasury stock. Now, again, journal entries always have to stay in balance. If you look at the situation, we've got 12,000 on the left and we've got 8,000 on the right. So we're $4,000 short on the right-hand side. And that's where the APIC account, additional paid-in capital, comes into play. Each type of stock has its own additional paid-in capital. When we did common stock, you did additional paid-in capital dash common stock. Here we're working on treasury stock, so you're going to do additional paid-in capital dash treasury stock. And you can go ahead and figure out that we need $4,000. The 12,000 minus the 8,000, we need 4,000 on the right-hand side or credit side to make it balance. And you can see from the journal entry that I have listed there on the example sheet, that's exactly what we did. Now, the other thing I want to point out to you is the following. If you were to say on your cash journal entry, okay, you purchased 2,000 at 6. So that was $6 a share. Treasury stock was $4 a share. So if you subtract 6 minus 4, that gives you a $2 bump, meaning you were paid $2 more than what it cost you. So you made $2 a share, so to speak. If you take 2,000 shares times $2, it also gives you the amount of 4,000, which is another way to check your additional paid-in capital amount. Okay? Take a look at letter C. Again, the first word in the sentence says the word sold. So automatically you say to yourself, my cash is going up. The second part of the sentence says you sold treasury stock. So you know treasury stock is going to go down. The only difference on this one is now we're selling it for less than what we paid for it. The rules that we use do not change though. So here we're selling 2,000 shares. And we're selling them for $3 a piece. So 3 times 2 gives us the $6,000 for the debit to cash that you see there. Again, we know that our treasury stock is going to be going down. And we always go down by what the cost was. So in this case, the original cost of the treasury stock was $4 per share. So you're going to take 2,000 times 4, and that's going to be 8,000, which you see I have as a credit to treasury stock. And again, we have to make sure that our journal entries balance. Now, in this case, we don't have enough on the left-hand side. Okay, we're short. We don't have enough. We're selling it for less than what it cost us. So in roundabout terms, we're actually losing money. Okay, so the account we use is still going to be the additional paid-in capital account. The only difference here is that instead of it being a credit, we're going to go ahead and debit the amount. And the amount that we need to make this journal entry balance is $2,000. Okay? So pretty self-explanatory so far. It's not a very difficult thing to do. If you look at letter D, it says sold the remaining shares. Now, here's where you need to just keep track of how many shares you have left. If we originally purchased 5,000, and in letters B and C, we sold 2,000 respectively. So we started with 5, we sold 4. That leaves us 1,000 shares left. And in letter D, it says sold the remaining shares at $4 a share. Well, again, we're selling something, or we sold something, which means our cash is going up and our treasury stock is going down. Now here we have 1,000 shares left. We sold them for what we originally purchased, $4. So 4 times 1,000 is 4,000. And then treasury stock, you go back to the original cost. And in this example, the original cost is the same as what we sold it for in letter D. So you're just going to have cash and treasury stock. Now, one of your 2 questions that you have for homework to answer, we do not sell all of our treasury stock. We keep some. So when you get to number 2 on your homework, it says sold 500 shares for $5 on part D. Well, we didn't sell all our shares in that case. So hence the reason why I left the question letter E, which says how many shares remain in treasury stock. Okay, so it's not a difficult question. I just want you guys to keep in mind, I want you to pay attention to your running average, or not average. I want you to keep track of how many shares you have left to sell. Okay, some companies buy treasury stock and turn around and resell it later because they can make a profit off of it. Some companies buy it and hold it. Some companies, when they do sell it, may sell it all, may sell part of it. So I just wanted to give you an example of each. Either way, the journal entries do not change. Okay, the journal entries follow right along with the slide in your PowerPoint presentation that gives you the journal entries. And again, we are not worried about the retirement journal entry. So for those of you that listened to the video on treasury stock, you should have heard me tell you, and if I didn't for some reason, we're not worried about the retirement journal entry. I'm just worried about the other 3 entries on that page. Okay? So it's pretty self-explanatory. It's not real difficult material. Again, one of the reasons, keep in mind, I want you to know some of the reasons why a company buys treasury stock. One of the favorite answers I get when it comes to that is to avoid a hostile takeover. For some reason, the word hostile just sticks out in people's minds. I don't know if it's from the movies or whatever it is, but it's an easy way to remember that one. And then just, make sure you listen to any of the situations. I did send you guys an email this morning concerning our midterm grades. So I do want to make sure that by Tuesday, everybody has submitted any of the homeworks you plan on submitting, whether it's via the assignment link with the assignment, or if you have emailed them to me. Please make sure that all of chapter 10 and 11 assignments are in. Okay? Are in. I'm going to start paying close attention to dates a little bit more. The other thing is I will be posting another video talking about the first exam, which is going to be on Tuesday. Now, one thing I want to mention before I get there, and so I'll re-mention it in the next video, is that technically if we were in class, guys, you guys would be sitting with me at 9:30 to 10:45, I believe. So it's pretty much early morning. What I will do is I will make sure that I have the exam open at 12:01 in the morning. So first thing Tuesday morning, the exam will open, and I will leave that exam open till 11:59 Tuesday night. You will have 23 hours and 58 minutes to complete this exam. There is no reason, okay, and I am trying to hold tight to this. The exam should take you no more than an hour. It would be the exam that we'd be taking in class. So what I expect from you guys is to, as of right now, this is 4 days away, 5 days away. I'm giving you notice that you need to set aside, and I would say give yourself 2 hours. But I don't think many of you will take 2 hours. But I'm giving you 5 days notice that on Tuesday I need some part of the day for your exam. You will be able to do it at any time during those hours, but you are required to do them on Tuesday. Again, it will open up in the very wee hours of the morning. It'll open up at 12:01. So you have from literally midnight all through the day into almost midnight Tuesday night. So you should have 23 hours and 58 minutes to complete that exam. That should give everybody enough time to be able to do what they need to do. On top of that, I will be posting a review homework assignment. It's not going to be a homework assignment, but it will be a review assignment. I will post that later this afternoon. And on Saturday, I will put up an answer sheet for that. And I will hopefully be trying to set up a Zoom meeting on Friday and another one on Sunday. So if you have questions, you will be able to get live help. Hopefully the timing will work for everybody. Again, Friday is not a great day for me to try to set up anything, but I will attempt to put an hour or so together or 2 hours together tomorrow, Friday, sometime in the early afternoon, maybe possibly early morning, so that I can go ahead and help you guys with any problems you have. And again, I hope to do the same thing on Sunday to allow for those of you that are planning on studying over the weekend, an opportunity to speak to me. Now, keep in mind, you have every opportunity to email me. I know that I've been a little bit laxed and having some other issues on the side, getting back to some of you guys on your emails, but I am attempting to do the best I can. And please just, if you have problems, come to me first. Just send me an email, or, whatever we need to do, we'll get it done. All right, so I'm going to stop the video here. I'm going to go ahead and upload this. I will upload the treasury stock homework, and I'm going to go ahead and find the review sheet and get that posted up there for you so we can continue to roll. All righty, signing off for this one.